Alright guys, welcome to the news trading plan for the week ending the 16th of October. Not a light week to start with, and then we get into a bit of action. There's lots of straddles and spike trades to do. Now, I'm not going to go through FNGs. These are just up to your discretion if you want to chuck them on or not. I'm just going to go for straddles and spikes. I'll probably add a few FNGs if the deviation's really large. Just so I can make sure I get into that trade. But lately I've been having a lot more success just using spike and straddle trading with the maze. I've had a couple of FNGs, but few and far between, and you can make that sort of money on your maze anyway. Now, Monday, public holiday, Canada, Japan, and America, so no trading on a Monday. It's generally always light, and even more so now that you've got all those banks on holiday. Tuesday is only one trade that I'm taking, which is the CPI here. I'm going to straddle trade it. I'm going to go for about a 100 pip take, a 30 pip stop loss, and a swain of 3,600. These guys here just don't move the market enough. There's just no point trading them. Something to keep an eye out for is the meetings here. Any Japanese meetings have the potential to move the market if they talk about using further easing, adding to the QE program. They come out and they'll say this in these meetings. So there's no trades to be doing before it, which is good, but to trade out of it, you can actually trade out of that if they did say they are easing further. But the only one for news trading is this guy here, CPI. Wednesday, we've actually got a couple. I spike trade the Westpac consumer sentiment, get a few pips from that normally. I'll spike it with like a 6 pip, 60 gap, 10 pip take, 15 pip stop loss. China CPI, that's a big one. It's one of the bigger data points coming out of China, and considering the world economy is looking at China at the moment, the Fed especially, it is quite reliant on how slow the slowdown is going to be, or if we'll see some form of pickup. Now, the Aussies gathered a lot of strength the last few weeks. So a bad reading from China could give really good selling points for the Aussie, because it's quite high at the moment. It's back up to, well, even close to 73 cents or something like that for the Aussie US. Aussie Japan's skyrocketing. So these sorts of data points are quite handy. Big news data points out of China with a negative reading would give you a good kind of opportunity to sell the Aussie dollar. But anyway, you'd be trading this one as a straddle, same as the straddle for the CPI, the sterling CPI on Tuesday. So you may only go for an 80 pip take, just because it's the Asian session. Might be a little bit more quieter. 80 pip take should be alright to do. When you straddle trading, just make sure you have a break even in there. I'll normally do it at like 50 pips, or about 50% of what I'm trying for. I'll put a break even in there of like 10 pips or something. So if I get to 50 pips, it locks in 10 at least. Because there'll be nothing worse than if you get to 90 pips and then it goes against you and you lose money. Very frustrating. So have your break even in there. So that's the second one for Wednesday. Now the third one, average earnings index. It's only a medium impact for some reason on there. I dare say on this one it will be a high impact. So average earnings index, definitely tradable. I'm going to spike trade it. I'll do a 770 gap, 10 pip take, 15 pip stop loss. 70 is in like a 7 pip gap, but when you use a maze, you obviously have to put in 70 but a 10 pip, which you have to, when you use a maze, you have to put in 100. 15 pip stop loss, obviously when you use a maze, you have to put in 150. So that's what I'll do for the average earnings index. And then another nice big one at the bottom here with US core retail sales at 11 o'clock at night. Straddle that one, same sort of settings, go for your 100 pip take. There's not too much that will get in your way. Realistically, there's nothing. Business inventories is not going to move the market against what a core retail sales will do. Thursday, we then have the Aussie employment change. That's another straddle. So 80 pips during Asian session should be fine. Also look at what you're trading against, because it can change. If you're obviously doing the sterling Aussie, that moves a hell of a lot more. You could easily do 100 pips, but you also might want your stop loss to be at 40 pips, not 30 pips. Just going on the average daily range of the pairs. So if you have a pair that you know moves a hell of a lot, you just have to be a little bit more relaxed with where your stop loss and you take profit and stuff like that. You might be able to take more profit, but you also might have a spike against you, and it will trigger at 30, but it won't at around 40. So sterling Aussie, if that's what you're going to pair this employment change, just make sure your stop loss is, you know, in sort of the right ballpark for the average daily range, if that makes sense. So then we go down to the core CPI for the US. Straddle again, go for your 100 pip take, 30 pip stop loss, 10 pip gap, 3,600 swing. Same sort of settings as what they always are for a straddle. Now Friday, New Zealand CPI, straddle it again. Asian session, 8:15 in the morning, not that much movement, so only go for your 80 pip, don't go for 100. And probably don't trade the sterling New Zealand. The spreads are always horrendous. It does move a lot, so if you were going to, make sure your stop loss is like at 50 or something. And that's it for the week. I might try and do another video on a risk on, risk off sort of strategy that I've been trialing for the last 3 weeks. It's been going really quite well. Obviously you got to trial these things for about 3 months. So, but first 3 weeks going well. You do need to do your research. You're setting up your breakout lines and your hook and go to reverse your trend. But I'll do a video. I'll show you some examples. It is working at the moment quite well in a risk on, risk off sort of scenario. So we'll show you that after.